Hello and welcome. Today is June 14th, 2017. My name is Derek, and I want to go over some comments that I've received recently. And yeah, the start. First one is from Cloxy or Cloxy. Probably pronounced one of those or differently, but let's go over what is stated. Hi Derek, I like this video, but it lacks practicality. I'm one of those nutwit who was all in leverage silver longs in 2011. On a bank holiday, I could not get out, and guess what? All stops were hit. I lost pretty much. Then I was relying on somewhat non-stop monitoring and just 8 to 9 hours per weekday of trading window, except on the day they claimed to find bin Laden, of course. Going over paragraph number 1. As far as leveraged, I'm way against that, big time. I'm against the whole banking system. My last trade in any type of equity of any sort is 2009, and I hated it. And there was a lot of problems myself, and the 8 to 9 hour per day weekdays stuff. There's a lot of bad situations why I totally loathe all of that type of investing system. I just can't recommend it at all. That's something I just don't do. And then the whole bin Laden thing, to keep people up to speed of what that means. On April the 30th, 2011, Sunday night, approximately right 7 p.m. New York time, 6:30, boom, the markets are crashing. About 8 p.m. that night, you get 7:30, there's articles from mainstream media sources stating that bin Laden has been captured, and that's the reason why silver prices are taking the big hit. So that was why silver lost its big steam momentum and had a multi-year bear market. So that is the first paragraph. And then when Sunday night happens and the whole thing's going on, you can't go on there and do anything on the trades. And how many times with gold and silver do you see, oh, it's Sunday, 6 o'clock New York time. You go to see what's happening because the market's now open. Oh, it gaps up 2%, 1%, or it gaps down that much. Well, why did it do that if the markets were closed? So, yeah, I'm very anti that market system, just big time. Paragraph number 2. I know it's easier to trade cryptos in the sense that you propose here, but how would you trade the silver chart with SLV, physical? What about the spread on these tiny moves? Going over that first part, damn right, it is easier to trade cryptos, which is exactly why you do it. It is much more profitable, exactly, again, why you do it. And all the nuances that I really hate about the banking system, a lot of them I find better within this. How would I trade the silver chart? Well, for me, it's accumulating physical silver, which is number 2. And then you get into stages of accumulation and distribution. Accumulation is when you buy. Distribution is when you sell. And I'm in accumulation stage, and every single time that you're buying something, you have to have a strategy. What's your sell? You can give me a price, that's fine. You can give me a situation. When the dollar's crashing, when people are rushing into silver, that's when I want to get out. When you buy at something, oh, okay, I'm buying at this. Well, Fibonacci's at this number, that's what I'm selling. Okay, have a strategy. If you can't have a strategy for when you're selling, why are you buying? And that's something I think is important to note. And as far as the method that I propose, that's for any chart, but I'm going to take the ones that give me the best profitability, and that's usually the ones with higher volatility. Silver doesn't really offer that. As a crypto trader, I'm hoping soon I can be able to buy gold and silver cryptos that are based on that price, sort of like they have with the US dollar tether on there. Because if there's ever situations where I want to unload cryptos out of that into, well, it would be gold and silver, that would be great for me. But I think that's going to be a little time before that's going to be easy to do. And about the spread on these tiny moves, well, that's for day trading. I mean, so unless that's the case, that's a whole other subject. And, well, I know how to beat that, but I'm not going to talk about that, at least for this comment. I will later on in a little bit. The second part of this paragraph, what percentage of investment portfolio would be allocated to a given chart? How much would be in? How much cash and sales, buy orders? That's something you have to understand based on the situation. And You have to understand what's going on. And sometimes the allocation is higher and lower in different periods. And I'm going through a lot of different time frames. Sometimes, oh my goodness, I'm highly allocated to this one thing. And when you have a situation when markets go up 400, 500, 600%, holy crap, when you look at your portfolio, I didn't have much of that code before. Now it's a huge allocation to my situation, because when markets have big gains, the key thing is you want to take tokens out, and that means your allocation level goes down. It's also a form of profit taking. So that depends on the situation, and it's basically understanding the situation. That's what it is. It's not knowing what percentage it is. It's understanding what you should, what the percentage, your percentage is, why, if it's too high, if it's too low, what measures do you do if that's the case, and so on and so forth. Managing buy and sell orders, that's a skill as far as, well, how to do it. That's easy. You put in the thing, okay, I want to buy this much at this many, submit. Okay, I want to cancel it. Push the cancel button. That's easy to do. Understanding how to do it, that's understanding key levels like Fibonacci, understanding when good top and bottoms are, understanding the market book and what to do with buy walls and sell walls, how to play a thin order book. That's just part of being an advantage player in gambling. How to manage budget. That's something that winning gamblers would know how to do. And it's very important to learn if you're not that good at it, because it's a very important mechanism for investing, gambling, that is. And as far as tax income, this is an interesting subject, because what's going to happen as far as taxing is concerned, and they want to tax profits on Bitcoins, do they consider, they as in the government, that of money? Because if they don't, and there's nowhere to write, how would you write it in there? And I think that's going to be a reason why the government's going to be forced to deem these cryptocurrencies as money if they want to tax people like myself and others whom are making it. I will definitely be talking to an accountant. But you know what? It's midway through 2017. That's an issue I need to look at sometime in the new year. But I don't know how that's going to work, because how do you write it in your tax? I don't know. Again, an accountant can figure that out for me, even though that's a background I come from. I'm also one of those too informed people who sniffed at Bitcoin from single or double digits, and I still do, because it's an outright Ponzi pyramid scheme without true value. The value is only there if you convince the next fool to buy it from when you're ready to sell. When all try to sell, all exchanges will crash. Only the crypto founders will somehow manage to sell. There's a lot to go over on this one. And now you talk about it being a Ponzi pyramid scheme. You know what? Maybe it is, but at this stage, it's extremely profitable. True value? Actually, there is some value towards it, as it is backed, of course, by its mining technology, but short-term, mid-term, it's a very good trading mechanism, I find. And the value is only there if you can convince the next fool to buy it from you when you're ready to sell. It's so easy to buy and sell. So it's not like there's a problem. In this case, when you go to the exchanges, it takes like 2 seconds to buy and sell. And then when you're an experienced seller and buyer, you can oftentimes get know how to sell for the best possible return that you can put in. And all exchanges crashing. Well, you know what? Exchanges are a difficult thing. I'm at a point with one of my exchanges where I deposited an okay amount of cash on Sunday, and it's still not even there yet. I sent out a little one of those ticket forms, which hasn't been replied back to. And well, today's Wednesday. That was Sunday. I have a hard time within these exchanges and the whole trusting part. But right now, I still have my cryptos, with the exception of one Etherum, and I have been, and I will continue to be turning them into gold and silver. So a lot of it, if you're playing like, say, pump and dump schemes, if they talk about those, or just managing gains. If you buy a code that gains 4 times, 5 times, 10 times value, well, you want to be at the point where, oh my God, it crashed. I lost 5 Bitcoins. Good thing I profited 15 before that happened. That's the type of thing I want to look at. Oh, I just lost 10 Bitcoins at the end. Good thing I bought all that gold and silver with what I did, and I bought this, I bought that, and I got this and that because it's money and I can use it as such. So that to me is how I look at managing it. That's my view of it. Let's continue on within this article. There's more paragraphs. Silver and gold. I'm a 100% silver nut still, despite having lost out on a huge ratio flip since 2011. Have the advantage. They can still be bought in cash. I was a fool who didn't always. Who didn't always. Now people still can scavenge some cash if they learn how to handle magnet. If you win big in cryptos, how much you're willing to bet you'll be asked to pay the tax rate you are paying on such a speculative investment today. So much uncertainty, or certainly, even if you do not manage to cash out. Going back to that tax rate again, it's going to be up to the government to determine if they want to tax. And I'm going to be talking to an accountant later on because it's an interesting subject to say the least. I've not seen much net silver gains in terms of spot, but I have traded a bunch thanks to greater fools buying last year's coins at a higher collector's premium. Done very well in that sense. Hard work but greedy gambling never worked for me. Calculated gambling is what works for me, and I learned that at an early age. I think I was probably maybe 11 years old playing like for pennies and nickels in a poker game, and I realized in the game I was playing that I had absolutely the worst mathematical hand that I had possible. And I decided to just put a bet out there because if they fold, and they did, and I thought to myself, and I can still remember it, that's how much I love that hand, that, yeah, that's a good play. And then I would come to realize, okay, if I bet, like, say, in that situation, 10 cents to win like 50 cents, heck, guys, if I'm right 30% of the time, wow, profitable. And advantage gambling is putting the odds in your favor. I am strict upon that when you are playing the game of gambling, which you have to play. You have no choice. Gambling is defined at pretty much making wagers with something of uncertainty. And uncertainty is easy to define. Something that doesn't have a 0 or 100% chance of occurring. Because having a 0 or 100% chance of occurring is certain. You know it's definitely or not definitely going to happen. So if it's not that, that means multiple outcomes can occur. So if you are living this world with cash in your bank, you're gambling that the cash in your bank is your best investment decision. So no matter what, you're always gambling. It's just people, the word needs to be defined differently. There needs to be a word for gambling defined as just making bad bets, like a disadvantage gambler, I guess. Someone who bets with the odds against them in their favor. Okay, continuing on with the this paragraph in here, and I wonder, can one trade silver like you propose on a layman's budget and keep the key advantage of low counterparty risk? What I proposed was how to trade the actual any market that way. It's just, you just put buy and sell orders in, and that's really all you do, and you just profit. If you have many cash transaction, you can make greater efforts to sell on strength and buy on more on weakness. That helps, especially with some positive cash flow to play with. I have negative cash flow, and I'm looking what to do. Maybe sell a bunch more than I'd be comfortable with normally and go wild to milk the cryptos. You need to understand, again, your portfolio, your management of your budget, and how which works for you. And understand within cryptos that you really got to know what you're doing in order to make some of these gains. Now, quite frankly, a strategy of just putting stuff into cryptos and watching your portfolio go up, that's been a good strategy so far. It probably will maintain to be such as it moves forward. But understand which strategy that you're doing. There's so many different ones out there. And the better that you are, the more that you know, the more of an advantage that you have. I'm making over 2% per day. It's day in and day out on average. That's extremely good. 1% is extremely good as well. And I'm sure there's others that are kicking my ass, which is great because I feel I can do better. And I know there's major gains in this type of environment right now. But a lot of it is based on skill. JSnip4 here on YouTube says he has an automated crypto trading platform that buys, sells trading ratios. I suppose it's in beta still. Would you know what it's called? No, I have no idea. As far as Veritasium is concerned, I was trying to buy it, but I want to buy it on a traditional exchange level because that's what I do. And I never got in, which is fine. But that was a spectacular call. But I was looking at that days before JSnip4 even talked about it. And anyway, so let's move on to another comment. This is from I Love Silva. As always, I appreciate your videos, but if you're going to buy and sell so many times, most of your gains are going to be commissions paid to your broker, not to mention the difference between bids and ask price. The price will eat you alive, and I have to go through both of these because they're very important. Number one, the broker, their exchanges, I'm talking about cryptocurrencies. If you can do it with your brokers, then you know what, you can do it. I'm sure there's strategies where that can happen. But in cryptocurrencies, it's 0.2, 0.15, 0.25%, depending on where you trade. And there's actually places where you can trade without rake if you're what they call the maker, which is what I'll go over on the second part, which is the bid-ask spread. So therefore, the commissions, it's not that high. So if you're talking about buying at 0.2% and selling at 0.2%, then you're breaking even at a 0.4% difference. So if I can buy at 100 and sell at 101, I can technically profit something. But that's not the spreads I'm looking for. If I'm long-term trading something, and I have a chart that does something like this, and let's just say the span of this is, we'll say a month in time, this bottom level might be priced in at 500 units. This top level is 1,500 units. So when you talk about situations like, okay, I'm selling at, say, 1,000, I'm selling at 1,500, and then you're buying back in here, you're talking about getting big gains where the fees don't even matter, which is why with even the brokerage stuff, even fees might not matter there as well. So if I'm buying something that's going to give me a 60% gain on one buy and one sell, oh, so I take 0.4 off of that. Okay, so 59.4 or 59.6, same thing, whatever. Now, as far as the second part, the bid ask will eat you alive. And that's exactly the whole point why you want to do it. But who does it eat alive? It eats alive at the ones that take it, the takers. So therefore, when you put a situation in, I'm going to put a sell order in for price of 1507. I want to sell 60 units. Enter. And then you're done. So now what happens is you just did that. We'll say price is 1200. 4 days, 5 days go by. Now price action's in that area. So some person wants to buy. They push the buy button. They're buying at 1507. They just bought your 60. Well, the bid-ask spread might be 1507 and 1501 at that time. So you got the better end of the spread that way. And, of course, you see that yourself. Oh, 1507, I just sold 60 units at that. Okay, so now you go to your portfolio. Maybe it's a day later because you don't go to this too often. You're a busy person, we'll say. Okay, so let's put a buy order in. Let's buy at 1247 and let's buy 72 units. And then we'll just assume that it goes down. But you go on vacation. You go out for, say, a few days. Or maybe you check your Wi-Fi midway through the vacation and you see, oh, I bought at 1247. Okay. Price action's 13.50 now. Okay, well, I don't want to sell yet, and it's a bull market. Let's sell this at 1680, and then you sell it at 1680 for 72 units. Of course, you could break it up. You could sell it maybe 10 different times for around 7 units each time, whatever strategy you want to use. But understanding your strategy is always going to be majorly important. When you understand how markets work, well, that gives you a huge advantage as well. So if you're getting into it, understand how it works. Experience and research, going on watching different videos, reading books can help you along the way. And finally, from Tim Chaffin, I'm thinking when, and it's close, when the metals start to run and the distributors run out of silver, a bigger percentage of people will have no other choice but to move their money than to Bitcoin, driving it to 10,000 before the end of the year. And it could hit 10,000 before the end of the year. Webbot's predicting 13,000 just a little after that, into sometime around the Super Bowl. We'll see around 13,000. And Bitcoin's going up because it's a free market. People are driving it higher. They want out of cash. They are getting into Bitcoin and other currencies. That's just how it's going right now, and there's no reason to think that's stopping, at least at this moment. And this is something I really do think about and I'm interested in when you talk about when metals start to run and the distributors run out of silver. This is really important to me. We're talking about JM Bullion, APMEX, Silver Gold Bull, any of those companies, all of the big mints that sell, and there's a lot of them. When they accept Bitcoin, the ones that do, boom, 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 they're getting sell orders like crazy. Those that don't, well, they'll probably they might get into it because they realize they have to work within their competition. And there's going to be people that turn Bitcoin into cash, into silver and gold as well. But what I'm really focused or interested on is what's going to happen within the silver market when this goes on. Because people buy these big 100-ounce bars, even several 10-ounce bars, or whichever form it comes in, big bulk buying. When you're talking about the large orders, the big commercials, however it is that they get it, that when this is going on, there's going to be a big rush to get into that as well. And when the physical supply market is going through events like this, I think the big obvious thing is, first off, the obvious one is premiums. Start to notice that the premiums going much, much higher on all silver. So if you were paying, say, 6% over spot for a particular item, you can expect that to go 10%, 11%, 15%, even over 20% over spot. Who knows? Within that situation. And when these situations occur and shortages of this nature come in, the next thing you got is situations where you have delays. And this has happened before in the past where, oh yeah, those silver eagles, they're not going to be available for 4 weeks. You're going to see a lot of those as well. And this is going to just naturally bring prices up. And for me, it's always going to come down to the control loss of how the system is run, as these prices have been manipulated for quite some time. The gold and silver as such. Within silver, it is a byproduct of both copper and gold. So if you're in the business of mining gold, at least I'm sure it is anyway, that means, okay, so you get your gold and now you got this silver. You might as well, at least while you have it, at least sell it. After all, once you got it, the costs from that point on are cheap. And same thing with copper. Once you got all your copper, silver's good. You might as well sell it. And of course, as a physical commodity, it's only so much of it that exists within. And when these exchanges just, the way the system is run, they lose control of it, and markets move free market like we're seeing in cryptos, we're going to see the movements like we see in cryptos. I'm pretty confident with the Bitcoin to silver ratio now at 150 that that's going to keep going higher. I don't know how high it can get. I don't know if it can hit 600 to 1,000 or not, but keep going to the upside, especially when you're talking about, yeah, if it's 13,000 for Bitcoin, that means you need $130 silver for 100 to 1. And if we're talking like $30 silver, then you're talking like 400 or 500 to 1. But I think it's going to go up and then back down to the stage where when you get to this level, that's like a temporal marker, as a web bots like to talk about, a prelude event of these distributors having all of these shortages and runouts, that's going to cause obviously prices to go up, but the ratio of almost everything to silver to work within silver's favor. So thank you for tuning in. It's been a long video as it's almost 26 minutes. I hope you found this insightful, entertaining, educational, and have yourself a great day.